Once known how transactions affect each account, one can now post entries to the journal. The journal discloses in one place the complete effect of a transaction, it provides a chronological record of transactions, and it helps to prevent or find errors, being that the debit and the credit amounts for each entry can be easily compared. A journal entry consists of the date of the transaction on the date column. The account to be debited is entered first at the left, the account to be credited is then entered on the next line, with an indentation under the line above. This indentation is used to distinguish debits from credits and decreases the possibility of switching the debit and credit amounts. The amounts for the debits are recorded in the debit or left column, and the amounts for the credits are recorded in the credit or right column. In the row under the account's names, a brief description of the transaction is given. Let's begin to journalize using the same examples used in Lesson 2. Now, instead of only analyzing the transaction is to be journalized. This transaction states, Robert Company issued common stock in exchange for $10,000 cash on October 1st. Note how the date is now given. This is due to keep the journal in chronological order as it is supposed to be. As noted in the previous lesson, it is known that common stock is a stockholder's equity account and cash is an asset. In this case, common stock is increasing, being that it is to be credited. And cash is also increasing, being that it is to be debited. First, the date is to be posted to the date column. After the account to be debited is posted, in this case being cash, and under the debit column one is to post the amount that is being exchanged in the transaction, in this case being $10,000. Next, on the line under the account being debited, we indent and post the account being credited. We follow to the credit column and post the amount which is always the same as the amount being debited. Under this we provide a brief description that can state, issued common stock. The next example states, Robert Company purchased office supplies for $5,000 on October 5th. Journalize this transaction. Both office supplies and cash are both assets, but as mentioned in the previous lesson, they are to be accounted for using specific accounts. Therefore, the account being debited is office supplies and the account being credited is cash. The date is to be entered first, then office supplies, since that is the account being debited, and enter the amount, and under that line, we indent and enter cash since it is the account being credited, and follow up with the amount on the credit column. The brief explanation can state, office supplies purchased. We had mentioned this other example consists of two transactions which are to be journalized separately. Since the journal is supposed to be strictly chronological, the event that happened earlier shall be journalized first. On November 1st, Robert Company received $500 cash from HP Company for advertising services provided. Note how now the specific service is presented, this to make the journal more detailed and specific. We know cash is an asset, and if it is being received, it is increasing, being that it is to be debited for $500. As discussed earlier in the course, it is known that services are increasing, being that advertising services are to be credited for $500. Later, on November 2nd, Robert Company paid $900 for office rent. Being that office rent is an expense which is increasing, it is to be debited for $900. It states that this expense was paid in cash, making cash decrease, and is to be credited. A description for this transaction can be office rent paid. In this transaction we are again faced with an asset account. On November 7th, Robert Company purchased machinery on account for $50,000. We know when something is purchased on account, it money owed that will eventually get paid. This is worded as account payable. Since the machinery was acquired by Robert Company, it is now an asset that is to be debited for $50,000. Accounts payable is increasing due to the amount owed by the company is increasing, making this liability to be credited for $50,000. To eliminate confusion between an account's name and the description on the journal, one should always identify the description with different color text, or different color cells.